Okay, now that we're recording, I just want to welcome you all to Tax Talk with Corry. If you've never attended this session, which I do believe these names look brand new, so let me just explain how Tax Talk with Corry works. This is an hour-long session. You get most of that hour to ask me questions, anything related to business, taxes, as well as anything business related. So if you have questions about business structures, I'm more than glad to answer those questions. If you have questions about HR or marketing, or you want to, a question about selling internationally or selling to the government, anything business related, I'm more than willing to attempt to answer that question for you. And as I always do throughout this session, I definitely recommend that you reach out to your local business consultant at your local SBDC. Having a relationship with them helps them to learn more about you so that they can further assist you, because I'm only here to help you for a short period of time. So after this session, you're not working with me no longer. If you're outside of our SBDC territory, you're working with your local SBDC consultant. However, before I open it up to conversation with you, I am going to give you a tax tip, and today's tax tip deals with wanting to buy a new business or buy an existing business and what is involved with that. So we're going to go through a very short PowerPoint here in just a moment that will outline some issues, some things that would be of importance to you. Before I go any further, though, I do want to give a disclaimer. So I'm going to just read this disclaimer to you. And it says, any tax advice reflects our personal judgment based on our own understanding of the facts provided to us and on current tax law. And with any other information that I might know, it's based on the information that I know. The SBDC is not responsible for misinformation, as this is a service offered at no charge to entrepreneurs and business owners. So I just wanted to share that with you, because, and it's with any training that you go to, is, it's based on the information that the presenter is giving to you. It's not written in stone. Okay, if you need that type of consulting where you want to know 100% without a doubt, you're probably best to pay a private consultant or pay an accountant, an insurance agent, an attorney for those types of answers, where there is a contractual agreement of money, and therefore you're wanting to receive an answer that is a good answer based on being, that you paid for that answer. This service, this training is all offered to you at no charge. So really briefly, a little bit about the SBDC, although you're probably already familiar with it if you came into this session. We are an entrepreneurial training program that provides assistance to entrepreneurs looking to start a business as well as existing small businesses. We offer business consulting, general business consulting. We cover a lot of different issues. We do have specialists throughout our state, though, that can dive deeper, such as myself. I am an accountant by trade. That is my education and my experience. And so I continue my education in accounting and in taxes so that I can hopefully answer your questions and bring a specialty to our statewide system here in Pennsylvania. There are 15 SBDC centers across the state of Pennsylvania. So no matter where you're located at, there is an SBDC to help you. And then also if you have friends or family in other states, or if you move to another state at some point, there are SBDCs across the entire country as well. So if you want more information, definitely feel free to ask me when I open this up to questions, and I can tell you whatever you want to know about the SBDC. However, again, I am already assuming that you're tied in with the SBDC if you're in this session. So now let's get into the PowerPoint. Need to share it with you. Oh. Okay, so this was just the introduction slide that I did not have up there, but when you registered, you probably saw this telling you that it was from 11 o'clock, starting at 11 o'clock. Our tax tip, once again, is I want to buy a business. Now what? So when you reach out to the SBDC, we can help you through this process of buying a new business. We're going to want to gather lots of information to be able to assist you. And that's what we're going to look at today is some information that you need to gather from the seller and maybe from your homework of your own with them so that we can assist you, especially with a business plan, because you're going to need to submit a business plan for financing if you're looking to buy a business and you need a loan, but also in just making wise decisions as to, is this truly a good business to buy? This is some information that you're going to want to gather. Also, this information that I'm going to show you is also important for those of you that may already be in business and you are looking to make a purchase, either equipment purchase, vehicle purchase, or even a building purchase. This information will be important to you. So each of these circles are items that you need to collect, and we're going to look at each one of these in detail. The first four is especially for those that are looking to buy an existing business. The other two are for those existing businesses thinking about buying other assets. Although, really, I could see, collecting all of this information no matter what you are, whether you're an entrepreneur looking to buy an existing business or whether you're already in business and buying an asset. So, tax returns. We always are asking for the last 3 years of the tax returns for the company that you're going to buy. Or again, if you're already in business, then we need the last 3 years of your business tax returns. We need existing tax returns that have been filed with the government, with the IRS, so that we have your income and your expenses for the last 3 years. At our SBDC, and every SBDC is a little bit different, but at our SBDC, we do a vertical analysis and a horizontal analysis, and we compare you to the industry. We look to see how you're doing, if your business is growing, like your sales, or are they decreasing. Also, we look at your expenses to see if, especially in my mind, if something is kind of like red flag, like why is that number so high? Or where is this particular expense? Or what did you spend here? Trying to ask some of those questions. So as you're listening to me, you're looking at the slide and you'll see that depending on the type of business structure that you're planning to purchase, if you're buying a business that is a sole proprietorship, then we need the Schedule C from their personal tax return, the personal tax return being the 1040. If you're buying a business, then you're going to the Form 1065. And overall, when you're talking to a seller, they should be very aware of the type of business tax return that they file. So they just need to be willing to hand over copies of the last 3 years tax returns. Now, with that said, as I said out loud, handing over these tax returns, there's probably going to be a need for a confidentiality agreement signed between the seller and the buyer so that what you learned from the seller, you can't go out into the public world and start talking about this business, okay? And if they would catch you in doing so, they're probably going to sue you. Moving on. The profit and loss statements of the last 3 years. Now, if the company uses QuickBooks, the seller will understand what a profit and loss statement is. Or if they use another type of spreadsheet, then you need their income and their expenses for the last 3 years that's not officially filed with the IRS. Now, these documents are not as important as the previous ones, which are the tax returns. The tax returns are the most important because that is what's filed with the government. That is the true paper trail. Do banks want these types of financial statements called a profit and loss statement? Also, from an accountant standpoint, it's called the income statement. It's nice because they're normally more detailed than what a tax return is. A tax return might take several expenses that you see on this spreadsheet on your screen and combine them onto the tax return under just one expense. So it's not as detailed on the tax return versus a spreadsheet. So the spreadsheet is nice to give more details. So we at the SBDC, we're always requesting both the tax return and these financial statements so that we can just dive deeper, learn more about this project so that we can help you even more. Next, we want to take a look at seasonality. The business that you're planning to buy, do their sales go up and down throughout the year? Think about some types of businesses like retail stores, such as JCPenney or Kohl's or Target. Their sales may go up towards the end of the year due to the holiday season. And then once January, February rolls around, their sales go down for a while before they start going back up again. So most businesses do have a seasonality, not all of them. So we're trying to find out the business that you're buying, what is their seasonality? Also, take, for example, a manufacturer. Maybe a manufacturer doesn't deal with the holiday season so much because maybe they're really busy earlier on in the year preparing for distribution, the stuff they're producing, distribution for the holiday season. So their busy season may be the summer. And then depending on the industry, of course, for manufacturing will depend on the months that they're busy. So that's what we're trying to gather here. Most businesses do not just have even sales across the year for each month. Oh, and back here, if you don't have that information, if you're able to obtain income and expenses like that income statement, when I go back here, this income statement or this profit and loss statement, if you can obtain a report on a monthly basis instead of just summarized for the year, if you can obtain it on a monthly basis, then we can see how sales have went up and down throughout the year. And if you can gather monthly income and expenses for 3 years, then we can see a trend happening each year. How does it go up and down? How does it go up and down for 3 years? So the more information you can gather, the better we can help you. Payroll information is very important as well if the business that you're buying has payroll employees. So the bullet points there are the type of information that we would be asking for from you, such as the title of the employee, the responsibilities of those employees. So we can just give a little blurb as you see down the bottom part of the screen there, just a little one sentence structure there. The number of employees under each title that you're listing, as well as the hourly wage, and that can differ per employee. So ultimately what we would end up doing is looking at each employee and possibly coming up with an average for that particular title. So say you have as you see in the example here, 3 servers. And I see here that the one gets paid, it says all 3 of them get paid $2.83. But let's say that one was $2.83, another was $3.50, another was $4. We'd probably try to average that out. Okay, but again, every SBDC can be different, so they may have a different reason and rhyme to their methods. Also, what's the average number of hours that each of these titled employees work? And then sometimes we like to know when were they hired, or if they're expected to be hired, when will they be hired, if projecting that. So this is a nice little table that we can email this to people, and people can actually type right into this table. Or of course you can just write it on a piece of paper, type it into an email. Doesn't matter as long as you get this type of information to us at the SBDC. Now, and I keep saying, this is stuff that we gather because, again, as I mentioned at the beginning, if you're seeking to buy a business, you probably need a loan. And if you need a loan, you almost are for sure going to need a business plan. And that's where we can help you out. But even just to make good, wise decisions, this is the type of information you'd want to get. Now we're going to jump into this balance sheet, this beginning balance sheet. As you see on the right-hand side, if it's large enough on your screen, a balance sheet is made up of assets. Those are the things that you own. It also includes liabilities. Those are the things that you owe money for. That's your debt. And then the equity of the business. What is your business worth? So the accounting equation is assets have to equal your liabilities and your equity. You add liabilities and equity together, that'll equal your assets. So if you'll see on the left-hand side, you'll see three major bullet points. The first one is a business purchase, whereby you are purchasing the assets of the business. So if you're buying the assets of the business, then the existing balance sheet for that company really isn't necessary, because you're not going to inherit the cash that's in the business. You're not going to inherit the liabilities of that business. You're not going to inherit the equity in that business. Now, it is true, you will be getting some of the stuff that's on that balance sheet, but we're going to ask for it in a different way. So in buying the business, you're going to need like a sales agreement, and that sales agreement is going to list out what you're buying. So you're going to buy inventory. And a lot of times sales agreements don't have the inventory dollar cost listed on it, because normally it's worded something like you'll be purchasing the inventory of the business at cost on the date of sale, because inventory is always going up and down, right? And then we're also going to be looking for a list, which should be in that sales agreement, of assets that you plan to purchase and the value associated with each of those assets. So it is information that comes from the balance sheet, but we don't necessarily need the balance sheet. The second major bullet point is a business purchase for stock. So if you're buying an S corporation, S corporations have shares, okay? It's closely held stock. It's not on the stock market, okay? You could just buy the shares of the business. And if you buy the shares of the business, you can ultimately inherit everything that the business currently has. So a balance sheet is necessary, because you can inherit the cash that's currently in the bank account. So you can just inherit the inventory. You inherit all of the fixed assets, as well as all of the debt for the business too. So you do inherit that debt, and therefore a balance sheet would be necessary. Now, with that said, before I move on to that third bullet point, I will tell you that if you're looking to buy a business, in most cases, you want to buy a business under the first bullet point, which is the asset purchase. You do not want to do the stock or the share purchase. Why? One, it's more tax advantageous for you if you purchase the assets through an asset purchase. You'll get a higher value for each asset to depreciate on your tax return, to write off, have as an expense or a deduction on your tax return. Whereas a stock purchase, you're going to inherit the assets, true, but you're also going to inherit what they call the accumulated depreciation. So if they bought a building for $100,000 and they've already depreciated $75,000, then you only inherit a $25,000 value to be able to depreciate. Versus, in contrast to, if you do an asset purchase and you buy that building actually for $100,000, you get to write that $100,000 off over 39 years, okay, on your tax return. So overall, I'm not going to dive too much deeper, because I would like show you some notes and things like that. But overall, better to do an asset purchase. Also, with those top two, I mentioned with the stock purchase that you inherit the liabilities. So if you're not well protected in your sales agreement when you're doing a stock purchase of an S corporation or even a regular C corporation, then if a liability becomes known after the sale, you inherited that. So if that liability that didn't come up during the discussion of this sale, if it's a really large a liability, I mean, it could put you under because you were not prepared for that liability that you've now inherited. So most cases, asset purchase is the best way to go. Although I'm working with a company right now that is in the medical industry, and there's current agreements and contracts in place that a stock sale is the best way, at least according to the attorneys and such as well, the best way to do this transition, so that they don't have to try to redo these contracts. So working with an attorney, working with an accountant is always our best suggestion when it comes to this, to make sure that you're doing it the right way. Third, okay, and I'm taking a little longer than I planned on taking, but I wasn't sure how long this would take to go through. Third is if you're an existing business already and you're making an asset purchase, so building and land or equipment or something like that, then a balance sheet is necessary to help build the business plan to seek financing. Okay, so that was a quick one. Debt schedule, almost done here, almost done. Debt schedule. So if you are buying the assets, going back here, if you're doing the first one here, the asset purchase, you do not need this debt schedule. But if you are the second or the third one, then we would need a debt schedule, and you're going to want a debt. If you're inheriting under the second one here, if you're inheriting debt as part of the stock purchase, you got to know what's out there. So you need to have this debt schedule. And you'll see that it's listed out, loan 1, 2, 3, 4, how much is currently due, what is the remaining term, and what is the interest rate. So, and there may be additional questions, like I'm thinking I need to add to this little table here. I would want to know the original loan amount, and I would want to know the current debt amount, so that I can, the original loan amount is important to make sure that the loan payment matches up. Okay. And then the existing, what is the existing debt is important to know how much more is owed. So this is very important if you are on one of the last two bullet points here on this particular slide. Okay. Some additional information, and there's always lots of additional information, so I tried to give you a few important ones here. Any expected changes with the sale of the business or the purchase of the asset is going to be very important for you to explain to us and for you to think through initially yourself. If you're buying a business, do you expect sales to change for some reason? Either just the idea that it's under new management might help sales increase, or are you going to offer and change the service up a little bit that would result in increase in sales? Same thing with these other items here. We're going to want to know what the monthly ending inventory balances are. So we have this great big spreadsheet that works out what your inventory is for every month for a number of years. So knowing what ending inventory is each month for at least the past 12 months is nice to have. I can't say we always get it, but it's nice to have. Third, any cost of goods sold insight, what is built into this cost of goods sold? How has it been calculated? Is it something that you just worry about at the end of the year on your tax return, or do you have some in-depth calculations going on within your bookkeeping system? Of course, we already mentioned the list of assets that are going to be included in the sale. We'd want to know that. The expected long-term loan terms. The sources and uses. What are you buying? We already kind of talked about that. And then this last one is accounts receivables and payables. So what are your current sales, accounts receivables that you can expect to be coming in if you're buying this business? And that's with all with those. If I go back here with these top two here, depending on how the sales agreement is written, you may when you buy the business and buy the assets of the business, you may get to inherit the accounts receivables. So any monies that will still be coming in, you may get to inherit that depending on how the sales agreement is written. But then also the accounts payables as well, depending on how that sales agreement is written, will depend on how the accounts payables are handled. So those are some things that are important as well. We covered some of them, a couple others as to discuss as well. So that is the end of that little session. Again, I took a little longer than I wanted to, although there's only a few people in this session. So I'm not too worried that I won't be able to get through your questions today. Normally we have much longer list of attendees, and sometimes it's really hard to get through all of the questions, and we normally don't get through all the questions. So with that said, I'm going to open this up. You should be able to unmute yourself if I have this set up correctly. And so let's start with Michael. Michael, do you have a question that you would like to ask?
Hi, Corey. It's Michael. Thanks for all the stuff. So I'm pretty early in my journey, if you will. So I was more on kind of gathering more information. So for now, I don't have any specific questions. But if we go through the list and something pops up in my mind, I'll kind of raise my hand or something like that. So thanks.
Absolutely, yeah. And what about Renee? Is that how you pronounce your name?
Yes.
Okay, wonderful. How are you doing today?
I'm sorry, I had a baby scream in the background. What did you say?
Oh, I said, how are you doing today?
Great, thank you. Sorry, I was trying to entertain him for a second.
Yeah, yeah. So do you have any questions, Renee?
I'm just here on the journey of trying to start my own business. I'm kind of on the in-between on decision making of what it's in the same field, but what position I'm deciding to take, I guess. I don't know if I want to be a commercial cleaner or a commercial cleaner network. So I'm kind of here to learn business details as this cipher which end I want to go for. I actually have a meeting set up with you for August 4th for one-on-one. So I'm just kind of here for the ride. I was recommended from CareerLink.
Good, awesome. So yeah, once you mentioned the type of service that you're thinking about offering, I was like, oh yeah, I remember her now.
Yeah.
And that we have a meeting scheduled coming up. So yeah, so no specific questions right now, it sounds like. So it sounded like Michael and Renee are thinking of starting a business, not necessarily buying a business. And so even in starting a business, if you are number one going to be seeking financing, then we need to have you work on a business plan. No matter what center you're at, we would want you to work on a business plan. The reason for that is it helps take all of your ideas from your head and helps you put it on paper. You're putting it like onto the computer nowadays, right? Where you type it up. That is important because if you're anything like me, I have ideas about all kinds of things running through my head throughout the day, and sometimes I can't remember those ideas later on. So by putting something on paper, it one helps you remember. It two also helps you, literally your mind, to help commit to the things that you wrote on paper. Now, what you write on paper is part of a business plan. You can change. It's not written in stone, but you're at least committed to thinking about that because it's on paper and you're going to see it more often versus an idea that went through your head while you're driving and you get to your destination. You can't even remember what you thought about because you went on to other thoughts. Okay. Also, a business plan is a roadmap. So as you would open your business, then it gives you something to compare what's really happening right now in real life to something that you worked on in the past that you tried to project how your business was going to go, and you can use those back and forth to make business decisions. Business plans are used to submit for funding. If you're looking for a commercial bank loan or private funding from an individual that you know, then the business plan will be given to the person that you're asking for money from. They'll read through it, study it, ask questions, and ultimately decide whether to give you the loan. So a business plan is used for many things, and each SBDC, depending on where you're located at, will have their own way of doing the business plan. So you work with your local business consultant in order to accomplish that goal. Also, as you are looking to start a business, if you do not need a loan, then you may not need a business plan. A business plan is nice, again, because it gives you that roadmap, it gives you the commitment. However, some businesses are like, hey, I'm opening up a small contracting business. I'm gonna be a handyman. Okay. I'm not sure they need a full-fledged business plan. But what those types of businesses need is they need to work with their local business consultant at the SBDC. They need to ask questions. They need to listen to what the consultant has to say. And then this person that's looking to start a business that may not need the loan, they need help going through steps to make sure that they are registered with the government. So, do you need an EIN number? Do you need a sales tax license? Are you going to be an LLC? And if so, you got to register your LLC. If you're not going to be an LLC, you at least may have to register your business name with the state of Pennsylvania. You need to have insurance. And like a contractor that's going to be going into somebody's house, there's another regulation through the Attorney General's office that they have to get the home contractor's registration or something like that. So working with a local SBDC, they can walk you through all of these things that you need to make sure that you are doing things properly. Even opening up a bank account. Some small businesses, micro one-person businesses, they think they can operate out of their personal checking account. You can't do that. You need to keep your business separated from your personal. One, if you're a liability, you need an LLC, limited liability company. You need to keep them separate so that the LLC is protected, or so that you personally, I apologize, I'm messing up some, so that you personally are protected should your LLC get sued. But also from an audit standpoint from the government, if you are commingling your checking account both for the business and personal, then that's an audit nightmare with the government. Whereas if you keep them separate, it's much clearer cut. So I have a question here. Let me see what it says, because I could go on all day talking to you. So can you share some common mistakes regarding taxes and financial planning you see from first-time entrepreneur? Would be great if there are any examples on consulting, digital service type businesses, which is what I'm thinking about. Okay, so common mistakes. I think I did get into that there at the end, was commingling your checking account, personal checking account, and your business checking account. Also, I see some small businesses, as they get started, they forget about insurance, that they need to buy insurance for their business. So make sure you're covered right from the get-go. If you make a bad decision and you get sued, that could have a huge effect on your personal life. If you're hiring employees, then make sure that you set that all up properly as well. I normally suggest that you talk to an accountant in order to get your payroll set up properly. Yes, you can do payroll through software that's available out there to you, such as QuickBooks, but also any other type of bookkeeping software out there can normally do payroll as well. Even the POS systems like Square and Clover, I believe, do payroll for you as well. So you can definitely do that. I don't have any issues with you being a do-it-yourself payroll person. And you're paying a subscription fee to that company anyhow to make sure that the calculations are correct. However, if you see that that you're dedicating too much time to payroll instead of you going out there and making sales, then you're probably good to start, hire an employee to do it or outsource it so that you can be out there making money. Let me see here. So consulting, digital service types of business. Depending on how you're starting your business, I see a lot of times consulting, digital service types of businesses opening up on a very micro scale, just you doing the business and obtaining the services. So a lot of what I just talked about is right on. Okay. Because you're operating all by yourself, you just you're really lax about making business decisions. You just kind of go at it, whereas you need to make sure you're official. even like your own website. A lot of times businesses forget about their own stuff within their own business because they're busy making money with their customers out there. So you need to make sure that you are having a nice website as well. Take care, Jen. I know Jen. I know Jen personally from another SBDC, so she jumped in to see this first part. So make sure your website's professional. Make sure your marketing is professional, because anytime somebody's looking for your type of business and you show up on the internet, you better look good, right? But you'll be amazed at how many people maybe in your type of business is not showing up good on the internet. Now, Renee, I think you said cleaning service, right? So I think that is what you had said you were going to do, as a cleaning service. I have to learn more about you. So I want to roll this around to Renee, using your questions, Michael. If you're opening up a cleaning service, if you're doing it yourself or you have some employees helping you, then you'll be probably busier than ever. Okay. If you're good at doing what you do, and if your marketing is good, such as on Facebook and other social medias, if your marketing is really good, you will be so busy that you won't be able to take on much more work. Okay. At least that's what I see of cleaning people around here. Now, doing a network, I'm not sure exactly what you're talking about there, so I'm not even going to try to touch on that one, since I'm not sure exactly what direction you're going. So, Michael, I hope that this helped you some. If you have other questions, either one of you, type it in the chat or unmute yourself. Let me see here. Both of you are thinking of starting a business. So, do you want to be a sole proprietorship, which is just owned by you? Or are you going to have multiple owners that would make you a partnership? Or are you going to be a one-person LLC or a multiple-person LLC? Okay, you have some different options there. The S corporation, I don't think I would worry about that right now, and especially the C corporation, don't worry about that one. I don't think now is the time. If neither one of you have attended a first step training, a first steps to starting your small business training, go to our website, click on training, and you will find different trainings available that you can watch. Specifically, look for the first steps to starting a small business. So I'm going to type pasbdc.org. I just typed the website in there. That's our parent organization, the Pennsylvania SBDC system. All of the trainings across the state of Pennsylvania are found right on that website, so check that out. And attend the first steps to starting a small business. Very, very, very important. And my thought is you're probably going to be an LLC. That would be my suggestion right from the get-go. It just offers an additional level of liability protection than what the normal sole proprietorship offers. And as for being a partnership, bringing in another owner, just make sure that both, or however many owners there are, but at least two to be a partnership, make sure that all of the owners are bringing something to the table for the business that is going to help generate income. Okay. Maybe one of the partners is going to be a little quiet, kind of going to work in the background. That's okay, as long as what they're doing is generating income. Otherwise, you're out there generating all the income and they're getting half of it because maybe you're a 50% partnership. In my mind, both people need to be bringing money to the table. They need to be able to get money, make money for the business, so that you then can split the monies up and not one's working way harder than the other. So overall, be an LLC, probably, without me knowing more about you, probably be an LLC and probably own the business yourself. unless there is a true reason to be a partnership. Okay, Renee says, if you're starting a business and don't have office space, what do you recommend I use for contact info? Good. So you can go right to Gmail if you're using Gmail or whatever other one you're using, and you can create, an email that says, I don't have a taxidermy business, but it could be Riley's Taxidermy at gmail.com. And that's free to get because that's just like you creating your own Gmail account. I'd kind of stay away from, I don't know what your emails are, but I kind of stay away from Hotmail and Live, which is, I think, part of Microsoft as well. Hotmail and Live are both Microsoft, I believe. And even Yahoo. Okay. Those three, even though they're great big and everything, they all email systems try to do a good job of filtering our emails and sending stuff to junk mail and putting stuff in your inbox. And then sometimes they even completely block emails from even getting into your system at all. And those three are ones that have been known to sometimes block too much, and then you don't get important emails, even if it was from your internet service provider. If that email gets blocked because for some reason Hotmail or one of those thinks it's bad spam, okay, you might not get your most recent bill or something. Okay, so I mean, I use Gmail. I'm not saying that's the one to go with or anything, but I've never ran into issues receiving or even sending emails to Gmail people. Sometimes it does go into their junk folder, but I've never heard through Gmail that something got blocked and didn't get through or didn't get received at all. Maybe I'm wrong, but that's my thought. So that helps you out with the email. The next thing is, no matter where you're located at, you want to make sure you have a website and Facebook page or other social media, okay, to get you out there, no matter where you're located, whether you're in your house or whether you're in an office. And then yes, talking about the address in the PO box, you can use your home address. There's nothing wrong with doing that. If you're going to be offering a business where you go out to your customer's location and they're not coming to you, then your home address is perfectly fine to use. As for a PO box, yes, you can have a PO box too. There are sometimes with government filings where you have to use a physical address, but if you want to use a PO box for all of your mail, that's fine too. Okay. People don't really worry about addresses if they're not coming to your location. Give me an example. I'm a business owner. I've been with the SBDC for 20 years. I've been a business owner for over 15 years. I do have a physical location for my business, but and I never checked into it, from a long time ago. But a long time ago, they wouldn't let me get mail at my physical location. Like, really, post office? Come on. So I had to use my home address. Now that does cause some confusion if you have a home address or what I call a mailing address and a physical address, especially if they're like two streets. Okay, I've had things mailed to my office location, and then it gets returned because I don't receive mail at my physical location, my office location. But a PO box, I don't think you'd have any issues there. If you use a PO box and then also it gets sent to your house on accident, either way you'll get it in the mail. So I know that's a lot of information. Sometimes I'm kind of like bouncing back and forth. To answer your question, using your home address because you're going to go out to other people's, totally fine. You want to get a PO box and run to the post office every day, totally fine too, whichever you'd want to use. Good question. And I'm actually thinking probably both of you, unless you tell me differently, both of you are going to operate out of your house. So if you're going to have a spot in your house, like a room in your house that you're going to consider your office, or maybe down in your basement, you're going to have a part of your basement considered your office. Then what you would do is measure like the square footage of your office area, wherever that might be located at. So maybe it's a 10 by 10 area. And I say that because a room is easy to measure, right? 10 by 10 room. If it's in your basement or something like that, and it's just a part of that big room, then measure it out 10 by 10. Square footage then is taking that 10 times 10. that 10 by 10 room, 10 times 10 equals 100, and that's 100 square feet. So, so you need to know that measurement. You need to know the measurement of your whole house, living area. And what you're going to start figuring out is your home office deduction on your tax return. So now you're going to track for the entire year all of your expenses for your house, such as your utilities, such as your real estate taxes, such as your mortgage interest, such as your homeowner's insurance. And there may be some others, but those are your main ones. And so you track those and you give the totals for each one of those: electric, water, sewage, insurance, real estate taxes. You give the totals for each one of those to your accountant, along with the square footage of your office, square footage of your house. And then your accountant's going to take all of that good information and put it together in a certain way. And you're going to get a deduction on your tax return for your home office. You also want to track your mileage if you're driving somewhere for business to either meet with customers or you're going to pick up supplies for the business. Then you want to make sure that you track your mileage. And if you don't necessarily, the old fashioned way was write down your mileage on your car and keep a little book in your car. Nowadays, there's apps for on your phone that will track everywhere you go. And then all you have to do is go into that app and tell it which one were business trips, and it'll do the calculations for you. Or also you can sit down at your computer and you can go to like, say, Google Maps, and you can type in where you started, where you went, where you came back to. You can do like the whole round trip, and you can keep track of all those miles. And then at the end of the year, again, you give all that mileage stuff to your accountant, and they can get you a deduction for that mileage. Okay, question here is, if you rent, can you still account for the square footage? So yes, if you live in an apartment or in a house, okay, that you're renting, yes, absolutely. You do the square footage, and then you keep track of how much rent did you pay for the whole year. And if you have to pay any of the utilities, then you keep track of that utility expense as well. Anything that you don't have to pay, you don't get a deduction for, right? Because you only get it if you pay it. So if you're renting but you're not paying the real estate taxes, then you don't get an expense for that because you never paid it. That's just built into the rent. So good question. Any risks of operating from home and facing issues with zoning, restrictions on operating business from the HOA, etc.? Yeah, that's a good question. So depending on where you're located at, in a residentially zoned area, or if you have other rules that you have to follow, such as this HOA that you're mentioning, you need to find out what those rules are. You need to reach out to your local municipality and tell them that, hey, I'm going to open up a business and I'm going to operate out of my house. Are there any rules that I need to follow to make sure that I'm in compliance, not breaking rules? As an example, some residential areas that you live in, you can operate a business out of any house. Okay, there's nothing saying you can't, but there could be rules on signage. You may not be allowed to have any type of signage in your yard or on your house or in your window. Okay, you just may not be able to have any signs whatsoever. With that said, though, depending on where you're located at, that residentially zoned area may have some rules like that for signage, but they may not enforce it. So there's times where I've driven through like rural residential areas, and I see like these little like political signs poked down in the yard, but it has a business name on it, and I don't know if they've ever gotten in trouble because they've been there for a long time. Okay. But it is best to follow the rules. That is what you should do. Ultimately, it keeps you out of trouble, keeps you from getting a fine, things like that. Okay. Even if they just give you a warning, you may become the talk in that borough or that city's monthly meeting. And a lot of information from those meetings get put on the newspaper or online. And so you don't want yourself to be put in a bad light out there in the public. So it's just best to follow the rules. So zoning, again, for either one of you, I don't see any issues with a zoning issue, because most likely you're doing, work within your house and people are not coming to you. You're going out to them. So I don't see any issues there. Next is check business OSHA regulations. So OSHA regulations. Yeah, I mean, anytime you have employees, you have to deal with their safety, make sure that they're safe. So, if you're in the cleaning business and you have employees and such as that, I mean, not even dealing with OSHA, but number one, any employees you hire, you better do a background check, because you're sending them into people's houses or into people's businesses. So you better know who you're hiring. One bad mess up can ruin you. So background checks are a must. And then safety of your employees. It would be good to do some research as to what safety regulations are there for your industry for employees. And also, if let's say you're a cleaning business, then you could do a search for what things should I look for in a house or in a business if I was sending my employees in to clean. And so when you go in, you do a tour of a house, if you see something unsafe, you either just turn it down, or you talk to the owner and you say, we would like to clean your business. However, these dogs are going to have to be put into a room that's not being cleaned, or they're going to have to be put out in the garage, or something. Okay, because dogs have been known to attack. Right now, don't get me wrong. There's a lot of pets that are really nice too. So you wouldn't do that for every pet. Okay. But if it's a pet that's just always being growly while you're there, it might be a good idea to look out for the safety of yourself and your employees. Or if you see other things in the house that just doesn't look safe, you need to have that discussion with them, or just walk away. Okay. Now, what I want to say as I'm thinking about like asking the internet these questions, I mean, of course, the SBDC can try to find the answers for you as well, but try AI if you haven't tried AI. There is Google Gemini, there is Chat GPT, and I think Microsoft's is called Copilot, I believe. I don't use it. I use Google Gemini most of the time, and then sometimes I use Chat GPT. And ask Chat GPT these questions. Now, it is true that, depending on how you ask the question, it will determine how to do the research for you. So if you're not asking a good question, you might not get a good result. But like your cleaning one, just as an example. And Michael, you'll learn from this as well, even though I'm talking about a cleaning service here. You might type into AI and say, I want to open up a cleaning business where I will be going into people's homes to clean their houses. I may also be going into businesses to clean their business. Are there any safety issues that I should look for in houses and businesses to help me make a decision whether I should go into a particular house to clean it or into a particular business to clean it? And you'll be amazed at the information that it's going to give you. And now it's not always right. And that kind of question there is, you're not really looking for a right or a wrong answer. You're just looking for ideas. But if you're asking for specific information, if it ever looks a little like not right, like you just kind of second guess it, then go to Google, okay, to a search engine, and type the question in there as well and see what it comes out with. And even like Google Gemini and google.com itself, the search engine, can come up with two different answers. So you gotta use your brain when you're looking at the results. Okay. Recommendations when discussing with accountants and banks for grants, loans to starting. So number one, I would say you need to talk to your business consultant, okay, about business loans and grants that might be out there. If you go to the bank and you say, I need X number of dollars to start a business, they're probably going to right away roll you right into the SBDC and say, well, before we get talking about loans too much, you probably should go talk to the SBDC to get your plan figured out. Okay. So that is very important. And let's see here. The accountant, though, the accountant's good to start building a relationship with the accountant, and going to the bank. There's nothing wrong with building a relationship with the bank. It's just that you're probably not going to see much output from the bank until they have a business plan from you. The accountant, if you're going to sit down and have like a one-time consultation where they probably don't charge you for the first consultation, that's okay. But right at the beginning, I don't think you're ready. Maybe you are, but I don't know you, Renee, yet. So, but if you're just thinking right now of starting a business, you're probably best to work with an SBDC consultant first. Get the plan figured out, even if it's not a documented plan, like a business plan, because maybe you don't need money, but just to have a good sit down, hour-long discussion, and maybe more will come from that. But to get your idea, your plan figured out, then you go to the accountant, then you go to the bank, then you maybe go to an attorney, then you go to an insurance agent. Okay. But you need someone to be the first contact. And I'm just telling you, after working for the SBDC 20 years, I would say SBDCs are the first place to go to, because they are the general business consultant. They look at the great big picture, and then they tell you when and where to go from there. Okay. And it's all free. All the services are offered at no charge. So good question. So Vern came in. That name looks familiar, Vern. We are just finishing up here at noon. We started at 11 o'clock. Again, this was a small group of people as we're about to run out of time today. We do offer this once a month, so be sure to check out the website. And also, if you're signed up with the SBDC, you should be getting emails from the SBDC. But if you even go to pasbdc.org and then / PennWest. Let me double check this website just 1 second here. Make sure I'm giving you the right one. I'm just going to copy this website and paste it into the Zoom chat. So specifically for this tax talk with Corry, if you go to this website, it's still the first website I sent you, but then PennWest Clarion's at the end, so it takes you to my SBDC's website. And so then you'll see the trainings that just we are offering from our center, and that's where you'll find it easier to find the tax talk with Corry. We do this once a month, normally on the third Wednesday. Again, we had a little bit of an issue this month, but normally on the third Wednesday. But at the same time, if it does get moved around, hopefully you'll know about it ahead of time. And we cover a different tax tip for the first 15 minutes roughly. And then we open it up to Q&A. So I'm not sure what next month's, tax tip is, but, jump in to find out what it is. And then any questions you have, make sure you have them written down so you don't forget. And it's just open discussion like it is today. And we normally do have a lot more people attend. We normally have people that come back every month just to listen because of this open type of discussion. And I normally try to answer questions on a first come, first serve. So I try to come in or open this up 30 minutes early in most times so that people can ask, can get their, or so that we start in a first come, first serve order. Okay, one last question real quick here. Can you share tips and suggestions on finding an accountant for a one-person LLC partnership type small business? Where to start? What questions should you ask to make sure they're capable and is good fit for you? Great question, Michael. So normally any accountant out there that does taxes should be able to do a one-person LLC. As for a partnership, that is a different story. Not all accountants are going to do partnerships, okay? So you go to talk to an accountant and you ask them, do you have experience with LLCs and doing their tax returns? As for the partnership, go to an accountant and say, do you do partnership tax returns? Do you have experience with partnership tax returns? Most accountants are going to tell you, especially when it comes to partnerships and S corporations and C corporations and nonprofits and that kind of stuff, if they don't get involved with that, they'll tell you right up front, nope, don't do it. Not even interested. Okay. But most should be able to do a one-person LLC. Now, another thing, a lot of people are going to say, find a CPA. That's a certified public accountant. I don't think that's necessary. I don't have my CPA. I'm not an EA, which is an enrolled agent. My experience is just general accountancy. However, as I mentioned at the beginning, I keep up with the training, just like any other accountant does. And my education and my experience, I would put up against many, many CPAs out there that own their own small business. Okay. So I don't think that you need a CPA. A CPA will be more expensive than a general accountant. Okay. I would stay away from big box tax firms. Okay. Big boxes, think of like Walmart, right? Okay. So now think of your tax firms. I don't want to say their names, but think of them big box when you see national television advertising for. They're overpriced, one. Okay. And some of them are very knowledgeable, at least the owner is, but the employees are not as knowledgeable. They're basically you and I walking off the street and saying, hey, put me through some training so I can do some tax returns this year. Okay. Now they do training, don't get me wrong. Okay. But for the level of experience and the amount of money that they charge, I don't think the value for the money is there. Okay. And with that said, again, there are some that are very, very good. I know of one nearby that is a very good big box store. At least the owner is highly educated. I can't speak for the employees. So that's where if you find a small business, and again, you're a small business, right? So support a small business and you ask them, what kind of experience do you have with business tax returns? I'm sure they're going to be like me and they're going to start talking and you can gain whether they have knowledge or not. So good question. Okay, I'm going to let you all go. Have a great day. I hope to see you all back here next month for Tax Talk with Corry. Take care, everyone. Bye-bye.